Joining us now, Ben Reitzes, Melius Research head of technology research, and it's good to see you, Ben. I figure you'd have to say the stock, you could call it a bear market, I guess, although the bull market was like nothing, the likes of which we've never seen. I'm channeling Trump. But it was an amazing bull run. It's down about 23%, though. Is it in a bear market, or is this a time to actually is it a falling knife?
I don't think it's a falling knife, Joe, and it's good to be with you on such an important day in our history, in New York especially. I think that Nvidia right now, last year, actually, if you remember, it took a break in the back half of the year. This is more severe. I think there's some macro worries and whatnot, but the big thing about Nvidia is they're in a product transition. And the rest of semis also is absorbing the potential recessionary risks and some other things going on. So I think that in terms of Nvidia, one of the big surprises on our last call was taking gross margins down in the near term. And semi stocks that hit that usually with a gross margin bump tend to not perform anymore for a little while until they get that going again. But I think they'll come out on the other side of that within a few quarters. And I think that'll be a big topic when he speaks later today, if folks are able to ask questions.
We watched Nvidia sort of ignore everything not related to AI. I mean, the Fed, global growth concerns, what was happening in other semiconductors. Are you saying now it might actually be paying attention to the possibility of a global slowdown, growth? I mean, I watch oil and look at the 10-year. We're going to see inflation numbers today, but there are some macro things going on that might be reaching a more climactic point than before with Nvidia. Is it subject to that or no?
Well, I think that they have a lot of things going on that are immune. I think the semis in general are having potentially another macro scare here in the back half of the year.
Yeah.
And Nvidia caught up in that. But in terms of AI in general, I think there's a lot of tailwinds, secular tailwinds that over the long term we're going to be doing really well. I feel like they're insulated a bit from some of these macro swings, like in PCs, some of the commodity servers potentially, and some other areas. So I think they're doing really well. One of the issues is they're sucking a lot of the air out of the room, and folks need to allocate their spending towards AI, which is potentially impacting some other sectors. That's been bigger potentially in the first half. I think that's going to be a big narrative again next year. So, look, I wish the macro data was better, but I feel Nvidia's pretty well insulated. But I do feel like it's gobbling a lot of mind share within the sector in general with this sell-off.
We hear margins at Nvidia and we just go, oh yeah, that's pretty good, whatever they happen to be. In a company that size, it just can't last where the margins stay where they are. So what would be considered, okay, margins are falling more, they're spending even more money, trying to make the next generation chips than we thought, and this is actually troubling that margins are going to drop to this low because they're still going to be so rich even after a pretty big drop.
Well, the thing is, Nvidia, is putting together tens of thousands of little parts of these chips, and it's very complex. They do deserve to have a very high ASP with the complexity of their product. And the other thing is they, over time, are going to have more software and services, which are very high margin. So some other companies, maybe Apple and others, get into this area where their business is an ecosystem, and they can tap into other elements of that. So I think that right now we have this Blackwell production issue, temporary. It hits gross margin, and then I do think they grow other things such as software and cloud and other things that allow the margins to stay relatively high. But yes, 78% gross margin was rarefied air. It was bound not to stay there. They had said take it down to 75 over time for the intermediate term. And it's just going to be a little lower than that in the next couple quarters. And then I think it can go back there with some positive mix and better production. But you got to watch that, Joe. It's a great point. part of the reason, is like the revenue acceleration is just so amazing. They really can't keep up on an OpEx side, and their margins are in rarefied air. It's better than elite software companies right now. So you do have to watch it carefully, but I feel like actually it'll get hit a little near term and then power out.